And welcome everybody to the Texas REIAs, the largest network of real estate investor associations and real estate investors in the great state of Texas. Over 150,000 members, participants, and attendees going back to 2003. So why do you care? Because real estate is local, and the Texas REIAs provides all kinds of local data and resources to Texas real estate investors. And one of the resources that we offer to Texas real estate investors is market data, because you always want to be a student of the market. You want to know what's going on. So we pull market data monthly from the Texas A&M School of Real Estate and a number of online sources, and then we publish the data to our members so you can be a student of the market. I'm going to tell you, we are not biased. Most people that give market data have some opinion. We're not here to sell you something or try to persuade you. We're not offering an investment for you, right? So we're not saying, there's groups out there like they're always telling you the market's going up. When we see the market's going up, we're going to tell you the market's going up. When we see the market's going down, we're going to tell you the market's going down. When we see it going sideways, we're going to say it's going sideways, right? And we do that every month. So let's talk about where it is right now. And show you a couple of slides. The average price house in Texas, $409,000, up 2%, not much, pretty much flat over a year ago. Median price house in Texas, $330,000, down 1%, also basically flat from a year ago. But if you want just one number, if you want to look at one number that kind of tells you everything about the market, I would say this is the number to look at. Months of inventory. What is months of inventory? Months of inventory, the way to think about it is like this. If you took all the houses for sale on the MLS and you stopped adding any more, we're not going to add any more, we're just going to sell what we got. How long would it last? How long before the last house gets sold, before the shelves are empty? And the answer is 4.5 months. We have 4.5 months of inventory. Now, that is also the average amount of time to sell one house. Now, average, right? More expensive. Some houses take longer, some houses take shorter, but the average is 4.5 months. So that's the months of inventory. It's the average amount of time to sell one house. That's how many months of inventory we have in inventory for sale. Now, to put that into perspective, okay, if there's less than 6 months of inventory, you're in a seller's market. If there's more than 6 months of inventory, you're in a buyer's market. If there's right around 6 months of inventory, you're in a neutral market. So what are we in? We're in a seller's market. We have been in a seller's market for the last several years. We never left the seller's market. Now, a year ago, we had 3.6 months of inventory, which I would describe as a pretty hot seller's market. A year later, we have 4.5 months of inventory, which I would describe as a lukewarm seller's market, but it's still a seller's market. So history, how do we get here? 2021, prices in Texas went up 18% in 1 year. 2022, they went up another 10%, 10.7% in 1 year. And then 2023 flattened out. 2024 flattened out. And at the end of 24, it came up a little bit, and that's kind of where we are now. Why did it come up a little bit? What happened at the end of 24? Interest rates came down a little bit, prices came down a little bit. So let's talk about interest rates. Real estate doesn't care about the economy. Real estate doesn't care about interest rates. Real estate cares about two things: supply and demand. That's it, supply and demand. Only in as much as something would affect supply and demand would it affect prices of real estate. So interest rates, what do you think about interest rates? Does interest rates make house prices go up or go down? What do you think? Who thinks when interest rates go up, house prices go down? Raise your hand. Oh, wow. Who thinks when interest rates go up, house prices go up? Okay, now this is an opinion question. Opinions can't be wrong, so either you didn't understand me or you're afraid to give your opinion. So I'm going to try this again. You can't be wrong. I'm not going to judge you. Who thinks when interest rates go up, house prices go down? Raise your hand. Who thinks when interest rates go up, house prices go up? Raise your hand. Okay, we got a lot of downs and some ups. Here's what's interesting. When interest rates go up, for sure, houses are less affordable. And when they're less affordable, fewer people can afford them, which means demand goes down. And when demand goes down, that's downward pressure on prices. But there are offsets. So what are the offsets? Here's what happened. Right now, the economy is not bad. Everything's not bad. People should be buying houses, but they're not. Right now, if you look at the MLS, normally when you look at houses for sale in the MLS, normally 2/3 of the houses for sale are resale, 1/3 are new construction. Right now, it's inverted. Only 1/3 of houses for sale are resale. Why are people not selling their house? Because they got a 3% mortgage and they don't want to give it up. So yes, the demand went down a little bit when the interest rates went up, but the supply went down. And when the supply goes down and the demand goes down, then what happens to prices? Nothing, right? They flatten out. So that's why we didn't get a correction, right? It was just flat. So I'll give you a little data. San Antonio, we're here in San Antonio, so let's talk about San Antonio. Average price house looks a lot like the state, $356,000. San Antonio is the most affordable major city in Texas, up 2%, median price $289,000, down 2%. So it's basically flat. History, San Antonio, 2021 up 16%, 2022 up 12%, 2023 flat, down 2%, which is flat, 2024 down 1.4%, which is basically flat. 4.9 months of inventory, which is the highest months of inventory of any of the major cities in Texas. Leases, pretty much flat, down a little bit. Lease price is flat. Not a lot going on, right, in terms of up or down. So what's going to happen? What's driving the market? Well, the economy drives the market a little bit. The truth, not a lot. During the Great Depression, real estate prices went down a whopping 6%, not much. During the Great Pandemic, another 1 in a 100-year event, real estate prices went up 30%. It wasn't the economy. It was the secondary effects on supply and demand. Now, certainly, if the economy is doing well, people feel a little better and a little bit more likely to buy real estate. Consumer confidence is neutral. That's slightly low, but neutral. Unemployment's good. Job growth is good in Texas. Stock market's doing okay. Recently, it took a little dip. Business growth. So the economy overall is not bad, right? So people should be buying houses based on the economy. Affordability, interest rates went up, making houses less affordable. That's a downward pressure. House price trajectory is flat. That's not up, not down. Supply, active listings flat, not up, not down. Months of inventory is kind of low. Okay, we're still in a seller's market. House permit trajectory, we're not building enough houses. We actually are in the middle of a housing shortage. Who's heard of this? We're in a housing shortage. We have 6 million fewer houses than we need nationally. And a lot of those are in Texas. We're not building enough houses. Right? People keep having babies and people keep moving here. Right? Construction growth, we got a problem. Contractors are dying. They're getting old, they're not getting replaced. The average median age of a contractor, general contractor, is 58 years old, and it keeps going up. So if you have a teenager, don't send them to college, buy them a hammer. I'm serious. I got a 16-year-old. He's like, I don't know if I want to go to college. I'm like, great, here's a hammer. I know plumbers that are pulling down $1 million a year, guys. $1 million a year for a plumber. Okay, you can go to college. I went to college. My folks went to college. I don't really care if my kid goes to college. Right? You get a 4-year degree, you get a ton of student debt, and then you get a job paying $60,000 a year. Or you can become a contractor or sell used cars and make 4 times as much with no student debt. And you don't have to work for a jerk, and you take off anytime you want. But whatever, we're out of contractors. We need more contractors. Housing demand, closed sales trajectory flat, pending sales trajectory flat. But this is probably the biggest one on the page. This should be a triple-sized bullet. Migration. This is the big one. Migration. This is the ratio of people moving in versus people moving out. Last year, California lost 500,000 people. Last year, Texas gained 500,000 people. Where do you think they went? And there's another 10 million, we don't know where they went, okay? But a bunch of them are here too. And they all need a place to live, guys. It's either going to be an apartment or a house, one or the other. Doesn't really matter, right? And we don't have enough, right? And the reason house prices don't correct in Texas, at least they haven't, is because even though interest rates went up, people are not selling their houses, and we've got this huge influx of people that need a place to live, and we're not building enough houses to put them in, or apartments. So you got growing demand and not enough supply, and that's what pushes prices up, regardless of interest rates pushing them down. So that's where we are. So I'll give you a forecast. Actually, before I give a forecast, let's see, ask your opinion. I'm just curious. What do you think your opinion is? Who thinks house prices will probably go down this year? Who thinks house prices will probably go down this year? Who thinks house prices will probably go up this year? Yeah, oh wow, mostly ups and a couple downs. Okay, I'll give you our forecast. That was probably the bottom of the cycle you saw last year, and there wasn't much to it. Interest rates should come down a little bit, but probably not enough to do a whole lot of anything. We expect that interest rates will drop a little bit, sales volumes will probably go up about 2%, and prices will probably go up 2%. We don't see this being an up year, down year. We see this being as another sideways year. There's just not much exciting going on that would move this in a big way. Now, that's obviously assuming a bomb doesn't drop or some major unforeseen thing. But I will tell you this, we've been doing market forecasts for 20 years, and usually they're pretty spot on. And it's not because we're like super geniuses, not at all. It's because it's not that hard, right? Trying to predict the economy is really hard. Trying to predict the stock market is not possible. Trying to predict real estate is not very hard. And the reason it's not very hard is supply and demand. We know how many houses we have. We know exactly how many houses we got. We know how many we're building. We know how many we're gonna have. We know how many people we have. We know about how many we're gonna have. We know how much we need. We know how much we're gonna have. We know everything. The only thing we're not sure of, we don't know exactly what's gonna happen with interest rates and a couple of other little things, but there's just not that many huge variables. So that's our forecast, and I hope you enjoyed it. You guys get a lot of value out of that? Everybody like that? Okay.